So 20,000 in today's money,
It's not.
it's not going to be a lot in tomorrow's money.
Yeah.
It's going to change.
Yeah.
So at least if you have, it's just having the benefit of it, simple and short, the benefit of it is that you have an income guaranteed. Even if there was still R1 million left in there, that money ceases. It's not going to pay out to the beneficiaries, it will just stop. But at least you know every month you're covered.
Yeah.
You don't have food in your fridge.
Good day, everybody. Today we have another guest talking about financial planning, right? Mr. Lutando is a financial planner, and I think it's always best that the person actually introduces themselves. But sometimes you might just fall short on how we introduce you. But Lutando.
Yes, good.
Yo.
Thank you so much. Kamalam is Lutando Kahani. I'm originally from the Eastern Cape, but in Joburg now. I am a wealth planner with Liberty, and a bit of a background with me is I've been an entrepreneur before this. So business development and sales has just always been a thing of mine. Yeah, that's brief about me a little bit.
Yeah.
Grew up all over the country, but yeah, I'm here now in Joburg.
I understand.
Yes.
So what is then the difference between a wealth planner and a financial planner?
It's the same thing.
Okay.
It's different. It's different titles. It's the same thing. Just like business development and sales. Business development is very it's the whole sales cycle. Oma sales, they already have someone who's done the pre-thing. You do the middle part of it, then you have someone else who's doing the middle part of it. But it's the same thing. It's the same thing.
Okay.
You mentioned that you were an entrepreneur, right? And
yes.
We are also entrepreneurs, and we've had this conversation before that we tend to fall short as entrepreneurs, especially when it comes to financial planning, because as entrepreneurs, we're just thinking about plus, how can I make money? And I'm not thinking about the risk element towards it. So can we please just give a introduction in terms of what entrepreneurs, and it's not only entrepreneurs, by the way, it's also freelancers.
Yes.
And sometimes you
That's
find,
true.
the freelancers and people that are actually working on contracts. So we're also talking about your artists that in terms of when you're looking at it from a risk perspective, what should we be looking out for?
So because of their risk is not, so the risk that is always looked at, it's always the risk of the individual or the business that is being covered. And yes, you have to be earning a consistent income in order for you to qualify for one of Liberty's products. So the risk is solely lies on the business and the individual that is taking the necessary cover, whether it's life or investments, but like retirement. They look at that specific person's risk as well as that specific business risk. So it's case by case. It's never the same for anything.
Okay. So would you say it's a bit harder for someone to get a life insurance or a policy with Liberty if they are an individual in terms of a freelancer and a business?
No, it's not. You have to be earning a consistent income. You have to show that you can afford the policy.
Yeah.
Liberty is honestly a no-nonsense business in terms of the clients that they take on. If they see that they are not going to be able to assist you, they tell you and they decline your application based on the criteria that they've looked on, obviously assessing risk for them.
Yeah.
But it's a company that is very honest with you. They let you know exactly what is happening with your policy. So they don't. If they can't see that you can afford the policy, they're not going to take it on, because it's all the administration through. Like any other entrepreneur, you never want to try and get a tenant and then at the last minute the tenant is like, and you've now taken down everything, the adverts, which would be a mistake. And then they say, no, I don't want to take the property anymore, kind of thing.
Yeah, makes sense.
Yeah.
I mean, we went straight to the body of this whole thing, and it's very important that we went straight for it, because as entrepreneurs, again, is that we are looking at it from a perspective whereby, as I did mention when we started, it's just plus. Then once I start hearing retirement annuity, I'm like, what is that? Should I be looking into that, or it's just something for people that are employed? So can we talk about the risk now in terms of if I'm not entertaining this, what does it mean, especially as an entrepreneur or somebody working under contract?
Yes.
Yeah. And the benefit. So it's risk and benefit.
Risk and benefit. Okay. So the risk for you of not taking a retirement is that you are 30 right now, for example. By the time you realize that I actually need retirement, you are maybe, let's say, 48 years old. You're almost 50. And now you only have about 17 years left until the age of retirement, which is 65. If you are putting away 500 rand at that point in time, you won't have a lot. But if you start now and you start putting that 500 rand, by the time it hits that 65, or if you die before that, it's fine. It will be paid out to your beneficiaries. But when you get there, you will have a lot more than you would have if you started later. So the risk for yourself as the individual is that now retire and you don't have enough, that money is gonna finish very quickly. And we see it in our communities, we see it with our parents, we see it with family members, we see it with everyone. They resign, they retire, they take their money, they spend it. Yes, they still get an annuity. That's why now things have been changed a bit. But they spend that money, and then now they need to go back to the job market to look for work. What happens to the youth? Because now at the top, it's not feeding out. They also want to come back into the job market, which then also lessens the pool. So the benefit of it is that if you have planned properly, if you've spoken to an advisor and they say to you, okay, Neo, you want to reach 65, unali chelete emu guy. I want to have 3 million rand as a lump sum. Sharp. And then after that, how much money would you need per month to survive on top of the lump sum? I would need 20,000. I would be fine. So 20,000 in today's money. It's not going to be a lot in tomorrow's money.
Yeah.
It's going to change.
Yeah.
So at least if you have, it's just having the benefit of it. Simple and short, the benefit of it is that you have an income guaranteed. Because you don't have a job. If you can't find a job at that age, also team. There's nothing.
But Lou, right now you just scared a lot of people by saying that, right?
Yes.
Is there a particular target market that you guys going for in terms of the retirement annuity? So say for instance, right now I'm sitting at home, I am an entrepreneur, but now I'm 45 or 48 that you just talked about right now. Is there a solution to it, or is it just too late for me to just take out a retirement annuity?
It's never too late, James. It's never too late, because there's a saying that says that the best time to plant a tree was 30 years ago. The second best time is now. Because you didn't do it then. Do it now. So the sooner you start, the better. Yeah. You are at least starting to bring your goal closer to you.
Yeah.
Of when you retire, you have funds that are available. You bring it much closer. So it's always best to start. I've got a client that I'm busy right now with, who is 52 years old, and she has got a paid up retirement annuity already. So it's just sitting there waiting for her. But she wants to add more. And she's going to carry on. And when she retires, she takes the money. She's already got a paid up retirement annuity. But she's thinking, you know what, I want more. And there's nothing wrong. You put that money away, it's bearing interest. What else do you want? Because they say, no, I want to save it. You're not going to gather much there. Over the years, put your money into something, because theoretically speaking, you should be able to double your money in 5 years that you invest.
You know, with RA and what you spoke about in terms of inflation and the 20,000 being 20,000 today, but it won't be 20,000 tomorrow, right?
Yes.
Can I perhaps look at retirement with an eye of whereby I'd like to increase it parallel to inflation and also interest? So in a sense whereby, because I'm looking at it from a perspective whereby if I'm to talk to my financial planner and say, you know what, if inflation is at about 4.7% or is at 5%, I would like to increase mine at 10% annually. So I'm looking at it in terms of it is actually increasing, because now we're finding ourselves in situations whereby if I'm telling you as the financial planner that I want my monthly installments or monthly payments to be 350, yes, I'm keeping it at 350 every year, but what's happening now is that when it comes to inflation, it's going to beat me.
Yes. That's actually a very good question, because you can, so with Liberty we can do that for you. We can say it'll increase, there is a cap, but it's beneath 10%.
Sure.
It'll increase over the years, every year in fact, it'll increase by the percentage that is selected, that you as the client are comfortable with. And that's nice, because like you're saying, it grows parallel with each other.
Sure.
The money that you're investing or that you're putting in on a monthly basis. And in between that, you win the lotto nyana, maybe 500,000 and you want to take 400,000 of that or 250,000 of that and put it into, you can do that.
Okay. No, I like that, Putlu. But now, the thing about investments and your policies, right? You've always been saying, especially with policies, is that the aim is not to enrich you or make you richer. The aim is just to make sure that you're able to continue with the lifestyle that you're living, right? Yes. So now, how is it determined in terms of how much was my lifestyle? So say, for instance, if right now I'm earning 25,000, but I'm saying that, you know what, looking at all of my investments, I would like to just make sure that when I retire, I'm able to earn around, let's say, 40,000. And I am able to, say for instance, if my monthly premium would be 2,000, I do have the affordability to allow me to pay 2,000 on a monthly basis. Yes. Now, would that be a problem on the retirement annuity side?
No, it wouldn't be a problem, because remember, you are contributing every month. Yeah. It's not the same as where in a life insurance situation, where you say, I want 10 million, but your property portfolio maybe is worth 5 million. What do you need the other 5 million for? So it's on the insurance side, on the life insurance, on the life cover side, it's different. But on the RA side, whatever you're putting in, that's what you're putting in. Okay. So you're not trying to get some money out of Liberty. You are investing that money, and we are getting the interest for you. So it's just a clear-cut case.
Okay.
Yeah.
So for my side, right, we covered the entrepreneurs and we covered the guys, the freelancers, right?
Yes.
Let's go to the employees.
Yes.
So as an employee, sometimes I have a retirement annuity at work, and now I'm not necessarily thinking that there is a possibility that I can have two. So let's speak about the pros and cons of that.
Sure. The pros are you can have as many as you want. You can take out one. With Liberty, you can have as many as you want. So as long as you are consistently contributing to your retirement, to that premium that you have agreed to. Yeah. And it's always advisable. It's always advisable where you have one at work, but you don't have one separately. For example, GEPF, that pension fund that you have there, if you don't move that pension fund to Liberty, if you as the person who's getting the pension, if you die within the first 5 years, maybe on the third year you die, and your annuity, which is the money that is recurring besides the lump sum that is paid to you on a monthly basis, it then will go to your spouse. But on the 5th year, even if there was still R1 million left in there, that money ceases. It's not going to pay out to the beneficiaries, it will just stop. Whereas if you move that money out of a GEPF to a Liberty, for example, if you pass away and there's still money left there, that will be paid out to your beneficiaries.
Can you please just explain what the GEPF is?
It's the Government Employees Pension Fund. It's one of the biggest pension funds in the country. So there's different funds. Okay. Some I won't mention because it's competitive.
Yes.
There's different ones. So their strategies of investing are different. Where they're investing is different. So it depends. But you'd have to look at the interest. Like we've got a portfolio that's performing very well, 11% consistently for the past couple of years. 11% returns per annum. So that's not bad. And what's nice about the strategy is that your money is invested in different portfolios: cash, bonds, equity, offshore, and yes, property is the fifth one. It's property.
Property.
Okay. So it's distributed equally. And remember, the reason why I feel I need to say this. The reason why it is like that is because there's no portfolio that will ever perform. There's no two portfolios that will ever perform, or they will never perform at the same time.
Yep.
So badly.
Yeah.
Two maybe will go down, and the other three will sustain. Or it's always fluctuating, and that's why you just put your different apples in different baskets.
Yeah. Can we just touch a bit on the investment part, right? Because I know that a lot of people are using their money to invest. So say, for instance, I've been working at a particular place for so long and I have the money, but now I want to invest with somebody. But now this person is telling me ridiculous interest rates. But now because I'm not well vested in the industry in terms of investment, I will then fall for that trick. So someone saying that you'll get 80% in 6 months.
Yes.
What is a reasonable interest rate that someone should actually be thinking about, that, you know, if it gets beyond this, then a
A reasonable interest rate would be around max 12%. That's actually good.
Yeah.
But if someone is saying to you 20%, much shy. There's no ways.
Yeah.
Because that's just how it's structured. The markets, it's not forex trading. These things are saying these guys, they give you ridiculous numbers just to get you, because they want your money. They just want you to put that money in, and they go squander it the way that they are.
Yeah.
If you look at data, banks, investment firms, 10 to 12, 13% and below.
Yeah.
Yes.
I'm happy you spoke about percentages, because even from outside, and I know there's a lot of people out there, is that you're looking at someone who's earning, let's just say that's their first job, and they're earning about 20,000. Like, sometimes it's more of, I'm loyal to my bank. And now you being loyal to a bank, you only find out that there's someone that can offer me 12%, there's someone that can offer me 10%, whereby I'm stuck with 3%, and I thought that this was a good investment. So in terms of how can people reach out to you, and how can you help people, especially as the beginners that are not well vested in such, but they need to know about such? So how can you help them?
This is okay. Thanks for that, because this is how we go out and actually assist people. As financial advisors or wealth planners, we're actually trying to get into a space where we communicate openly. You ask a question so that you understand, because a lot of people don't actually understand what is going on. You know, so you'd have to get in touch with us. Get in touch with us directly, and that's the only way that we can assist you, because each individual is different. So you'd have to have an individual conversation with that person. Each case very different, always very different. Some things are more important than others. Some people have kids, some people don't. So yes.
But look, there's something that I want to ask, right?
Sure.
And I think a lot of people don't think about this until the time it's crunch time, and then when it happens, people run away, right? Then let me just explain the situation. So if you are in a situation whereby right now you can't afford it anymore, so you had a good paying job, you were paying consistently, however, we are now 8 months in and you haven't been employed for 8 months. Your cash reserves is actually running out. Now you've been paying your retirement annuity, and now let's say for the past 20 years, you're at 50 years right now. But now the problem is that you can't afford it anymore. So what happens to your money? Does it become cancelled, or what happens to it?
No, your money is it'll remain there.
Okay.
It doesn't get cancelled. The money that you put away is the money that you put away. If it stops, it'll stop bearing interest because you're not contributing. What will bear interest is what's in there. You're not adding anymore.
Yeah.
It'll remain like that. It's not that now you're not going to get that money. That's money that you're putting away for yourself. So it's not money that is risk related. It's like a policy. A policy will be cancelled because you're at risk and you pay in advance.
Yeah.
Whereas with an RA, you're investing your money so that when you need that money, you can get it back. But obviously there are regulations with Liberty. Minimum retirement age is 55.
Yes.
If you start contributing at 30, the only time you will smell that money is if you die and it goes to your spouse, or you reach 55. And that's at the earliest where you can say, okay, you know what? I'd like to withdraw.
Okay.
55 going up.
Okay, so you can actually start withdrawing after the 55.
Yes, you can.
Okay. So does the two-pot system also work with retirement annuity looking at Liberty?
So that is law. So it the way it will be paid out is exactly as according to the two-pot system, where you'll get the lump sum and then you get the annuity.
Okay.
It's still everyone there falls in line because it's got its own laws that govern it.
Yeah.
The Derma pension fund and stuff like that. So everyone it goes there. Yes.
Last one from my side, right? I'd like to ask you a question personally, bro. Which option of payout would you prefer if this was you? The lump sum or the cash flows?
I think now that I have a little bit more knowledge,
Yeah.
both is fine because, like we said earlier, people get that money, they spend it, and then now doesn't have anything left. And I've been in situations like that myself where I'm telling money and say, you know what, I'm gonna spend this, I'll get some more. But then you could have done better things with that money. So if now at least you did spend the lump sum on whatever, a nice car, nice property, but at least you know every month you're covered.
Yeah.
You don't have food in your fridge. Guys, just like, sorry if I may just branch out, just like the funeral cover situation, we like to take a lot of funeral covers, but what happens on the Monday when everyone is gone and that money for the funeral cover has paid for the funeral weekend? It's over. It's like a party, and then now you have to deal with the hangover in the morning. How those kids that are left behind, the family that is left behind, if the property that is left behind has high rates, how are they going to pay for it? None of them are employed.
Yes.
And it's true, even if they are employed, there's a lot of issues. How are they going to pay for it? After that, after the Monday, it's trying. There's nothing you can do.
All right. Can I ask Leo the same question that I asked you? Which one do you prefer? Which one would you go for and why?
I'd say give me the lump sum.
I knew you were going to go for that.
I'd say give me the lump sum.
I'd say know what to do with it.
I'd say give me the lump sum because I'd know what to do with it. Because I think within my journey of property investing, man, you are faced in situations whereby you do have a lump sum, right? And now you need to make decisions in terms of how you spend this lump sum. So I think thus far I am what's this? Not understand, disciplined enough to see that 1 million in the bank and be like, it's fine. Let it sit there. Let it sit there. So I think if I was in a situation whereby I had to choose between lump sum and whereby I'm getting cash and then also on a monthly basis, I would say give me the lump sum and then I'd put it in a 30 days. And then in the meantime, I'd be looking aggressively for properties to actually invest in. However, I think it's really important for you to have a situation whereby you have your savings, looking at your retirement annuities and looking at your funeral covers and also your life covers in case anything happens to you before time. And then on the other side, there also has to be an aggressive way of how you're actually getting money. Because personally, 11%, it makes sense, right? It makes sense when you're looking at a financial institution, you parking your money there. However, I also believe that people need to also find other ways of growing their money.
Yes.
So you have where you know that this place is my safe place, then this is where I play with my money. Yeah.
That's true.
So, no, what would you take? You thought you'd get away, bro.
For me, it will really be frustrating if I could get cash flow because the thing is, I know what I need to do with that money. Like if 1 million, I remember even at home, I did tell them that, guys, if anybody is going to put me as a beneficiary, just know that your money won't be there by the end of month 2 because it will all be gone in a deal that I know for sure that I would have invested in. So I know I need one or they won't visit me, but I did tell them that I will do it.
Sure. No, but that's a good spending, so it's fine.
Yeah. But look, do you have any last words?
Yes, thank you, Jets, for the platform. I don't know if I should my details.
Yeah, feel free.
Okay. You can reach us. We're based in Johannesburg. You can reach us you can reach me, in fact, on 066 079 9239. I'm also on TikTok and Instagram as well. My handle is @Lutando. LUHTANDO. So the T and the H are swapped around.
Yeah.
It's usually TH and then, but they are now swapped around. So yeah, that's how you can reach us. I also do have a website. It's Lutando Gahane, LUTHANDOGARANE.co.za. There you can reach me directly and you can WhatsApp me, call me, email me from the website.
Okay. No, on the 7th of September, we will be hosting a property investing workshop, man. Speaking everything in detail now.
Yes.
Of how you can actually manage your funds correctly with Butlu, what can people expect from you?
Oh, it's gonna be fun. We're just there to have a chat. We're not there to say, this now. We don't sell. We add value.
Yeah.
So it's just looking forward to having a decent conversation about financial planning that's going to add value in people's lives.
Okay.
From my side, man, I like how Patlu ended it off. It's just about value. And if you have been following us, you know that we prioritize on value. And there's nothing that makes us happy about combining the two, financial planning and also value. So make sure that you do buy your ticket and see us in person.
Invest like a pro.
Sure.